Okay, we're going to go ahead and get started. Hope everyone had a good weekend. A lot to talk about tonight. A lot of activity, not a uneventful future session like we've had, for quite a while. So we've got a lot going on, I'm sure, that you have on your mind that I hopefully can answer for you and try to make sense of what is happening out there. Now, I'm going to start out with just kind of introducing myself and the system for anyone that's new, because this is public, so I could have new people signing in. So if this doesn't interest you, you can go do something else. I'll be back, go through this in 5 minutes. All right, so let me share my screen. Here we go. So a little bit about me. If you're not familiar, you can always go to my website at www.elliottwavesage.com. And basically, I'm a market analyst and forecaster, and we look at stocks. We follow a system that you can learn more about. And if you can navigate through the website, there's a lot of information about how we trade, our system, and about Elliott Waves in general. If you don't know what those are, what that's all about. Throughout the website, there's also videos and things, and more information, like more information about myself. Here's our membership levels we offer. I offer here basic, pro, and elite members, and this is our subscription service through YouTube. So if you're interested, you just go to my YouTube site, click here to join, and you can join the level that's interest you. And if you're not sure, you can always do the $5 one. It's very affordable, I would have to say, for the value that it provides our members. And then I've also edited this recent on-demand stock analysis. It's been overwhelming volume. So this is the last week, it's $25. Next week, it's going up to $50. It's just too much volume and too much, for me. I can't just do this all the time. So I'm glad I'm very happy it was popular. But if you are interested, I'm still going to honor this price for the rest of the week, but I've got to raise the price, or I'm going to have to hire someone to do this full time. So that's fine. I'm glad everyone's interested in that. So, but I do offer this, and you get a detailed report along with the video, if the live stream isn't enough, because the live stream is a 5-minute overview. And of course, we have a lot of different customers, and clients and people that follow me, and they're happy. And you can go to my Twitter and my X page, and you can interact with me in real time. Typically, I'm always on that social media platform, although I'm going to be more active on TikTok and Instagram. And you can, engage with me and talk about whatever's on your mind. Okay, so that's what I want to say about myself and system. Now, I think everyone's interested in the market. So let's look at the market and take a look at what's going on. So I'll give you my market overview before we get into these stocks. Okay, so obviously the futures are down. Okay, now, a lot of people will, say, hey, okay, yeah, it makes sense. There's all this, fighting going on in the Middle East. Oil prices are higher. And, of course, people are panicking and we're going to sell. Right. But the selling, what if I told you was already destined to happen? It was already planned to happen. And then the news just kind of emerged. So that's kind of what we're seeing. So now we have a reason to justify the sell-off that we have been waiting for. So we've been waiting for this sell-off since, I want to say even back in October. Let's look at the ES. So yeah, I mean, we've been waiting for it. Now the market may have a reason to sell off, because it really hasn't had a reason. So maybe this is the reason. So if our long-term chart plays out, and again, just long-term, and we're heading down to 638, 620, this will be the reason to do it. And if this is the reason, that means things are going to get worse. They're not going to get better on the ground or in the air. I guess I should say in the air and the water. That's what the chart says. So the chart says there's going to be no taco. It's not a nothing burger. It's actually going to get worse. And in fact, it could get much worse in the coming week. So prepare. It's not too late to prepare. Look where we are. And look where we have to head, or potentially lower. So you have plenty of time to prepare still. So there's no excuse not to prepare for selling, which we will see, and we're seeing. But what the chart says, if the chart plays out, it says it's going to get worse. not better. And we started to see that a little bit this weekend. A supposed, radical, I want to say jihadist, but we had the radicalized, American who decided to go into Austin and kill people. And we may see more of that. And that's going to escalate things at home, and not, and that's going to create drama in itself and fear. And now you have also the Middle East. I'm also seeing online right now cyber attacks are starting to happen. Systems going down. So that may be the next phase, cyber. So this isn't over yet. It could get worse before it gets better. And that's what these charts indicate. Okay. And then when we look at oil, right, if the sequences in oil, need to play out, it should continue higher. We could have a three-wave move, and it could correct deeper. It could even come back and backtest this breakout at 67, but it still is likely to extend. This is an impulsive way, right? It can extend as an impulse, or it can extend in three waves. But if it's going to be an impulse, right, we're looking for something like this. If it's three waves, we're going to dive back down, and then we're going to kind of wander around here and then go back up pretty, sharply, and then continue. The bigger picture in oil, it's pretty, we've been in this correction since 2022, essentially. And we saw this correction end on my channel, and we called that end of the cycle right around this time period. And we knew that oil would continue higher, and it has. We didn't know why it would, but we just saw the breakout on the weekly cycle, right? It was really just a simple trend line that anyone could draw themselves, and you could see this breakout. So once we knew the cycle's over, we're in a new uptrend on the weekly cycle. Now we know why. Okay, well, here's why. So where's oil going to go? Well, oil has a lot of room to run. It's now in a bull cycle. It's in a bull market on the monthly, and now the weekly is bullish and not bearish anymore. So if you're hoping for lower oil, I don't think that's going to happen based on the charts I'm seeing. Yes, it could dip around and chop around, but the weekly and monthly cycle are now higher. It has entered a new bull market, whether you want to believe that or not. It has. And it can continue higher to our final target. Our final target is $196, but I think we would probably go to $230 a barrel. I've had this box on this trade-in platform here since 2022, since this area, and I said this will be where we end up. So is this the conflict? Now this would mean it's going to get way more severe than we can imagine, if this is the reason. Now this could be other reasons why we get up this high. We don't really care the reason at the end of the day. I don't think it's going to do that unless something catastrophic happens with nuclear weapons and things like that. But I think, can we see something back up to, $80 and then we pull back again? Sure. I think someone was mentioning, well, why can't it just be a big three waves? Well, it can be. So it can do that. So we have three waves and we make another big three waves, right? Maybe we come back up, we come back down, we come back up, and then we make another three waves. We can do that. So that's possible. So we have to, be aware of that situation and plan accordingly. So there's that possible path. And then there's another path that it could do this, and it could still be an X, and then you just go down. So when this is finished. So yeah, I mean, there's a lot of paths here, but right now we're in the monthly cycle. So right now we're correcting this cycle, right? We're in this cycle. Oil tends to like to go vertical. When it does go into a bull market, it goes vertical. So we'll see how it goes in the coming days. If we don't see that, then maybe it's still corrective. Okay. All right, looking across the rest of the market, the VIX trying to take out 24 on the futures here. If it can do that, I think you're going to get a big wick. But if not, yeah, it could still bounce around here, and the market could still chop around as dip buyers, just can't help themselves, and they'll come in and buy the market. Because there's still a lot of complacency in this market. There's still a lot of denial. And even though things are happening right before your eyes, it's clearly the market's trying to sell off, right, on these higher, like you're already in a daily cycle decline. You're clearly in a weekly cycle decline, right? And now the 4 hours turning bearish now too, right? And then to end this, and we'll go into your questions. Like I said back when I gave the video to all our members back up at this point, I said it was on a T. The market, the bears had the best setup. There was complete bearish alignment across the entire market. I only see that once in a while, very few times, maybe once every couple years, you get that alignment across the market from a bearish standpoint. And I always said they blow it. The bears blow it. They always screw up. They squeeze. They chicken out. No follow through. Well, we haven't seen that this time. So they had it on the tee and they hit it down the fairway. And if they can keep this pressure going, and we could take out 675.59, we could see the floodgates open up as the algorithmic sell-in realizes any hope for a bounce to 700 and 710 isn't going to happen. And in fact, they were on the wrong side of the move, right? Because the algorithmic buyers, they I think were expecting another swing higher. And if we break this low, I think that's kind of like ends that conversation. But yes, there's always a chance we can go higher, but we need to wait and see how tomorrow develops. And this is our chart for tomorrow. We actually open lower, and then of course, perhaps there's some happy talk, peace, another 10 days of peace or whatever you want to say to get the market to buy back in, and then this happens, which would be obviously something no one saw coming, and probably neither the administration. So that's what this path shows, and I'll stay on this path for now. But if we do break 675, the 675.63 area, then we're going to go with a 1-2-1-2, and we're in the waterfall sell-off moment. And I don't know what will happen because we have a lot of leverage in the system that's going to have to deleverage. A lot of people are not hedged, and they're going to have to hedge. And then, like I said, the algorithmic traders are offside, and they're going to have to get back on side, and then they're going to also now start shorting the market on every rip. And all of a sudden, that's going to create, this feedback loop. So that's why it can just kind of really melt down quickly. All right, so let's go to your questions. I got a few of them tonight. So we start off with this ETF on crypto with ETH. So with crypto, we're still just kind of going with our chart here, okay, on ETH. A larger degree flat that needs to finish 5 waves down, and we're looking for something like that. My target's always been like 1,200, 1,000, somewhere in that area. Some people have targets even lower than that. I don't know if it can go that low, but I guess it could happen. Anything can happen. But I think when you look at this wave, I think that's how it's going to end. Okay, and so the downside target for this other ETF, the problem is you can't correlate it 1-to-1. I know, like, we want to do that, but we can't. You can't do that because it's its own business. It's its own entity. It could have debt that also goes into the valuation of their share price, right? It's not just the value of how much ETH it has. It's the value of, you have to consider every, how much debt does it hold as well. And you have to understand that as well. So the share price isn't going to be correlated like okay, it's that kind of mathematical like relationship. I would assume you're going to get another 3 waves down, just like you saw here. You're going to repeat something similar, and you're probably coming down to this lower area, and you're going to try to test these lows. That's what I think is going to happen. Okay. There's always a path. It could be 1, 2, 3, 4, 5, but that wouldn't be good either. So there's this path here where you can do 1, 2, 3, 4, 5, and then bounce and then come back down like that. So I would, I would be in no hurry to buy this. In fact, I would be looking for short opportunities, perhaps at 898 on the back test of this support, now resistance. If it did something like that, I would short that. All right, Coinbase, very similar chart, and I'm gonna call it this for now. Higher time frame, it's in its own flat. The problem Coinbase has is this just 1 2? Is it 1 2 1 2? Where are we in this downturn? It looks like to me, we're obviously still in wave 3 on the higher time frame. So I think we're just going to keep labeling it like based on like what's most probable. We're not going to label it perma bull, perma bear. We're just going to label it just very consistent. And now one more low. But if this low comes and we take out this peak, let's go more important on the 4-hour yet, then it's going to be a 1 2 1 2, and you're going to be looking, more than likely you'll be coming back down to these lows down here. This is not a fallen knife I want to catch. Now, if you look at this structure, look at this top-in process here. One thing you notice is you don't really have a right shoulder here, right? So one of the most nasty things the market could do here is give you 5 like this, and then you rally hard, and then you go down again a second time later, later on. But regardless of that, if 5, does breach this support area, based on just my experience as a trader, when a top breaks down like this, it creates massive selling. Okay, so I wouldn't be surprised, again, guys, I wouldn't be surprised if this turns into a 1 2 1 2. I'm in no interest in hurry to buy this instrument, but I do think it's due a rally. It's due that right shoulder, right? It doesn't have that, and it has a 5 count, and we'll go with that for now. Okay, it also is part of the ARK-K ETF. And the ARK-K ETF needs like one more low, and it's not that far from where we're trading now compared to where some stocks are. So I do think if we get a low, it's going to probably be very minor in nature here. And then you should get a big rally. But I think you need to be really careful about any rally in this instrument, because it can easily break down. All right, that's what I think is going to happen. That's the most likely path, is we finish this and we rally, and then at some point it's either a massive drop back to the 22 lows, or we go to new all-time highs. And I wish if I knew the future, that would be awesome. But we don't have enough data yet, but perhaps as we trade up to it, we'll know. But right now, it's too early to say. FTAI is, let's see here, very bullish. We have a lot of divergence here. We have the peak at 3. We probably have some kind of 1 and 2 in that structure. So you're probably in some kind of 5th wave. You're probably in a 5th wave right now. Just kind of looking at it, 1 2 3 4 5. So 1 2, right? And I'll go back and just check out everything else. So this would be like a 1 2, and I'm sure the subdivision is somewhere in this. And yeah, probably right there, 3 4 5, and then you put the peak there. Some kind of crash correction. And now it looks like it's almost finished, right? It's almost finished. So it can end at any moment. That's kind of what I'm seeing here. Maybe from a wave count standpoint, you have 1 2 3 4 5 1 2. Yeah, maybe not just yet. Based on the subdivisions, maybe you have a few more swings left. A few more swings left. Based on the count. All right. And that's going to create the bearish divergence on the higher time frames, which you're already starting to see. Now, if it's like a lead in diagonal, it would be finished sooner. It would be 1, 2, 3. It would be 1, 2, 1, 2, 3, 3, 4, and then you get 5. So you'll still get the same amount of swings. They'll just look a little different. All right. Then the next one is this Sprott. We did really well forecasting this. I mean, we could have never imagined a breakout like this, but it has happened. Now you have your own divergence. So this should be pulling back. But look, you have plenty of upside to come. Taiwan Semi. So this is one we had to buy here at 224. And it's pretty much been straight vertical. And I updated this count before our live stream. And it looks like I wouldn't be surprised if we're in a flat here. I wouldn't be surprised if this is a flat, especially with tonight's price action. And you do something like that, and that 3's in, and you're in like a 4. I wouldn't be surprised. So something like that. And what we know from this cycle is it can extend. So this could be a 1, 2, and then it just keeps going. But to me, I think it's going to be a flat. I mean, if not, then 5 is going to extend because you have a 1, 2, 1, 2. Do you think Taiwan Semiconductor is going to be up, big tomorrow? Looking at the market down 600 points or something, 500 points, I doubt it. So I think it's going to be in this flat. Pfizer has been tricky, and I think because it has this lower low, when this rally finishes, it's going to have a shakeout, and it's probably going to break that low. So right now, it looks like we're moving in 3 waves here. It's subdivided, 5 waves subdivided into 3 waves. 1, 2. It looks like we still have more upside in 3. Then you get 4, and then you should get 5. 5 may even break out of the downtrend and really confuse people. And then I think you get Y later. So I would say more upside as long as this trend line can hold. And more importantly, that line. Now, if that line breaks, then it's going to be something different, but it would still, I think, go higher. I probably would go back to leaving this as 1 and then making this 2 and giving it a flat, and then you come out. Cisco looks like it's also in its end of a major cycle. Now, typically, when you make the first break above a high like this, there's always a consolidation. It's very rare it just moons. It can overthrow that, but normally it gets kicked back into this, and you get a cup and a handle, right? That's what we normally see. That's why they call it cup. That's why they invented the word cup and handle, because you see this all the time on charts. So typically you're going to get so it's unusual for it to end here. And just like we saw in the other instrument, it could be in a flat as well off of that peak right there, and we're going down. We likely see it drop to $38 at some point as it corrects the whole cycle from 2002. So yeah, this will be a big drop, but it's made a higher high. So on the grand super cycle, it's very much a buy. But I think there's a lot of pain that's going to come. Let's take a look at the shorter cycles. See, I think it's in a flat right now. I just don't, it's hard for me to say, oh yeah, it's going to moon when the market's down 600 points tonight. I just can't, it's likely to do this and do the flat and come back down. THT has been doing pretty well. I don't have it labeled, but it's a 1, 2, right? And then you have this impulse off the low. It's been very strong. You have a 1, 2, 3, 4, 5 for a 1, 2, 1, 2, 1, 2, 1, 2. So very unusual structure, but that's what generated the explosive move. And look, you don't even have the 4s and 5s done. I would just stay long. If for some reason someone's dumb enough to sell it, buy it. And it could come, maybe it could come back and back test 15, but this looks pretty good, and it looks like there's a lot of upside yet to come. QuantumScape, very interesting here. 5 waves off the high. It looks like that correction may have ended on Friday, and go and perhaps, like I said, we don't know how the market's going to handle the trade with a higher oil. Sometimes higher oil is like, okay, inflationary, energy runs, and the green, stocks that support electric vehicles and things, alternative energy, systems that get, that benefit from higher energy costs tend to go higher. However, if inflation's considered and the long end rates will rise, that could hit these kind of low earning, no earning, high PE, small caps. So I'm not ready to say, oh, it's going to go higher because oil's going higher. We need to just let the market decide. But when you look at this count, it could be finished on Friday. We'll know tomorrow. NEO also looking for a move higher. Same idea. I guess we'll know. But with NEO, I see a structure that doesn't look like. I would be very surprised if that's a major low. I think it may run a little bit more and then drop, and then we can come out of this situation that it's been in, and a massive inverse head and shoulders for a massive breakout. But if you're going to sit on the sidelines and wait because you want the perfect entry, you're talking about buying it at $4 versus buying it at $4.87 or wherever it trades tomorrow, and look where it could end up. So don't miss, if you really believe in this, at some point you just buy it, because it's only 87 cents. The risk compared to the reward is enormous unless it's wrong, or unless we break these lows, right? So while I'm showing this chart, I got to say, like, if I believed in this company and this structure, I would probably be buying it right now, regardless of whether it's at $4 or $3.50. Because if it does start to run, then 2 is in, and it's going to just go vertical. Okay, so you have to decide how you want to trade that, how you want to trade this. But I think the most important level is $3 right here. You lose that, then it's the structure's lost, and it should go below $1. QUBT, quantum computing, looks like it's about to have some kind of Minsky moment here and hit in capitulation. We have a box at 374. I would not be interested in buying it. I would only want to short it. And we'll see what happens tomorrow. More than likely, what I have shown here will start to play out. Indo is one I've been really trying to help people get on board with on X. So if you don't follow me on X, I gave this trade to everyone on Friday when it was down at like 447. Now it's at 588. God knows where it's going to be tomorrow. I mean, who knows? I guess use your imagination. If you're in it and you follow me, you take some partial profit, because you know these things can go away as fast as they come. But perhaps we'll get lucky and get one of these super big candles like we've seen in the past. So as of now, what I was telling you guys on Friday is it was ready to go 3 of 3, and we had this inverse head and shoulders ready to break out, and that's what happened. And now we're gonna this should gap up tomorrow, and then finish the 4s and 5s. So I don't know, like, there's really nothing else to analyze, but it's too late. If you missed a move, you missed a move. And then you have to reassess your trading style and understand why you didn't, decide to buy it, or you have to just reassess things, because you can't chase it now. It's too late. You missed the move, because you could lose 40 or 50% if there's happy talk, or there's 10 days of peace or whatever, because then this is just going to come back down, and then you'll be upset. You chased it. So I have no interest. I have no desire to sell this right now. Okay? And of course, for new people that have joined, we were buying it. I told all my elite members to buy this thing right when we were starting to break out of this wedge. You see this wedge, right? We saw oil break out around this time, and I said, just go market buy it. So our entry is here. So guess what? We don't really care what happens here. We're down here. Now, if you bought it up here, well, yeah, you got jammed up. You chased it, you jammed up. But I do think this will probably gap up tomorrow, and then you should take some partial profit and then let the rest ride. Put your stop probably at 407. See what the market does. Sunrun had a massive meltdown. It's very interest rate sensitive, but also it had earnings report that wasn't interpreted very well by the market. I mean, basically, they were hoping for some kind of dividend and buyback, which I think is kind of crazy for a small cap solar company. I mean, did their investors lose their mind? They really thought they were going to give a dividend. I don't know. But I guess that was they sold off in anger, and their guidance was like cautious or whatever. But they actually had a good earnings report. So I don't know. That's the fundamental case. And again, solar is a tricky one. Typically, when oil goes higher, people want the value proposition that solar provides. When you do the ROI, net present value calculation, it's easier to justify those projects because the cost of energy is higher. So the demand typically goes up as long as it's not considered like a 3-day oil pump. So we just stay long. And yes, could it make another low? It could make a fifth wave and go down, and this could become an ABC and not a WXY. And yeah, it could even break these levels we have here, but it needs to hold this level. So you can step back and look at the chart, and you can see what I think is coming if you're patient enough. But most people aren't patient enough, and they won't be able to profit from it. But let's see where we are in 2027. We'll come back to this, and we'll see where we're at. All right, this one, IOVA, there was a question tied to this one here. Let me see here. And I think I missed a question, and I'll come back to it on the QUBT. So IOVA, a stop loss. Well, because of where it is, it depends where your entry is. I mean, basically, it's bullish above 167. So, I mean, as long as you stay above where is this level? Let me get it, like 163. The market can continue higher. If you're a short-term trader, then you want to put your stop right here at 351. But I think, looking at this, if I had to guess where we are with this right now, you have 1, 2, 3 connector, 1, 2, 3. So you probably finished a big sequence here. So it's probably a bigger pullback coming, and then another leg higher, and then even a bigger pullback. So that's probably what you got to look forward to. Something like that. So I think it's going to pull back and probably fill that gap, and then it'll probably make another run higher. The silver miners, you have to really take a step back and look to appreciate this chart. So pretty much was been in a bear market since 2011 and broke out. This one defied all odds. It broke out and didn't actually come back. No cup and handle here, just straight vertical. Now we have a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. And you see this box, guys, this color isn't that pink. It's this like purple, violet. That box was given when I first started my YouTube channel back in 2021, 22. So talk about being patient. Now we're getting paid. But see, a lot of investors are not patient to buy it down there. But anyway, here it is. And now where are we in the count? So the count looks like this as of now. And we should be finishing a 5 fairly soon. And then peaking in a more of a larger cycle correction, which should take months. But for more upside. Now we know with these charts, the 5s can extend. But I think this is extended quite a bit already. It's hard for me to believe it can go even further in a wave 3. So I think it's likely it's going to start to do a top-in process here. Tilray, we're looking for this impulse down, and then it could find its major low. And that's it. So there's really nothing else to say on Tilray other than I think tomorrow could be a pretty nasty day to the downside. If it isn't, right? If it isn't, well, then you're in base still, and then this thing is going to squeeze back up to probably 15, and then go down again later. So I think you really need to hold below 834 and then you'll get this final push down. But when this ends, it's probably going to end with a massive gap up when it ends. So I don't recommend shorting into this, but it's what I think is going to happen. The structure is still bullish on the higher time frame as of now. Going back to QUBT. So QUBT, the question is the pullback box. Okay, so yeah, right here. 374, and your stop loss is a 0, basically. So you can look at chart support. You could try to, look at chart support on it to see if there's a better area that it can better pinpoint. I mean, there looks like a lot of support right around 241, 230, so maybe it goes there. So I'd be looking for like 230, somewhere in the middle of this box. But your stop loss will be 0. So if you're going to buy it, you have to be a true believer. Because what we always say on our channel is when the grand super cycle corrects, right, and we get this grand super cycle correction, it can always go to 0, right? We really shouldn't analyze the first part. It's not relevant, right? This is just noise. We have to go from the bull's case. Because it's probably doing something completely different as a company back there. So this is the graph. So it's got to hold this. Okay. Now going back to where we were, Novo. WY is pronounced Weyerhaeuser. Okay, well now I know. Yeah, Weyerhaeuser. Okay, interesting. All right, so there you go. Novo. It's been brutal. I mean, look at this impulse. Look at the extension. 1, 2, 1, 2. Just annihilating investors. And now we had a B wave that we sidestepped and somehow made money on this on our channel. Our elite group made money on it. We sidestepped. So this is a teaching moment and for our group. So we bought this box and we made some easy money on it. And if I remember how this went down, right? If I remember how this went down, we came back down here, and we needed continuation higher in 5, but then we broke this level, which indicated it was corrective, and so we closed the trade at 54, and then I stopped covering it, and then once that happened, it turned corrective, and the rest is history. Now, a lot of people could say, "Oh, you missed these gains, you missed that gain," but we would trade other instruments. We don't like to trade in this. We wanted it to be in a major, new bull market. So now we have a double correction. So double correction has to happen, and the count it's in the heart of 3. What I think the low is going to be when this is finished. So we were on this trend line and we breached it. I think we're going to hit this trend line, and you see this breakout here of this support. We're going to back test it. I'm sorry, there's resistance. We're going to back test it as support, which coincidentally lines right up with the trend line. See that confluence? And that's like at 28.36. So I'd be looking for that area, $28. That would be where I would target if I was just trying to catch this falling knife. But the better way to buy it is, okay, yes, it's probably going to bounce there. Wait for the bounce, the confirmation of the end of the cycle, because you get a big bounce, and then just buy the first pullback. And then you're okay. And I would give that trade to any of my members any time. Because then we can define our risk. We know the correction's over. So, but if you do try to buy it here, yeah, it could just keep going down. So it's like too dangerous, because we can't get a box from it because it's so bearish. But man, what a crazy meltdown. So this is its kind of last stand here, though, because if it fails, I mean, it's gonna go all the way back down. I don't know. I don't know. I guess people are getting out while the getting's good. What I keep saying about this stock is somebody must know something about what's going on that we don't know. The general public does not know. Wall Street does not know. Like CNBC, no one knows. But there must be insider. There must be people that know, and they're getting out while the getting's good. Because these kind of meltdowns is like what we had before Lehman busted, before Countrywide, before all these. When stocks do this, then the scandal emerges later. And then you're like, oh, that's what was going on. So I'd be careful if you're in it. Something doesn't seem right with this type of price action to me. And I'm not implying there's a scandal, but would I be surprised that there's a scandal that emerges? I don't know. Maybe there's side effects that that come up, or maybe the product isn't maybe some competitor. Like, I don't know what could happen, but a stock like this doesn't typically melt down and trade. Now I think the PE is like super low on it too now. So there's something wrong fundamentally, and we as peasants that trade, we don't know, right? We don't know this. We don't know. We're not inside. We're not privileged like probably some of the institutions and sovereign wealth funds and these people probably know. And I trust me, they're not obviously buying it. Okay, HIMS has a similar meltdown, but HIMS chart, it's kind of messy. I don't think I need to make this dark anymore. But basically we have a 1-2, 1-2. You have this trend line that's coming up against. We've been following it all the way down, keeping our members out of it, and now we're right up at the end. There's a small chance that that's the low at 1379. I don't think it is. So let me look at where we are in this this wave. There's so many WXYs. I'm like losing. I have to squint at this a little bit. Make them a little darker. Change it up because it's hard to see. It's that bearish. Okay, so this will help me see it. Okay, so let's take a look. So we're still in the correction. We're making this. So that's 5 right there. So this is some kind of 5. So this is likely some kind of impulse. Let's look at this first part. Yeah, it's yeah, I hate bringing bad news, bearing a bearer of bad news, but it looks like something like this. And then if that's the case, this bounce needs to fail, which is what it looked like it was doing. It needs to go lower, but look, you don't have a lot of room. Look at this A wave. So, yikes. So it's either going to do that, and then, I mean, it could breach the box here, or it's going to capitulate and go back to the WXY structure we had earlier, right? And we just don't see it. It's not finished yet. And we tag this with erase and divergence. So let's just assume it's going to just drop, erase divergence, and at the same time, it's going to hit 1270. And then we could say it's a finished correction. And then we would wait. We would still wait. And once we start to see a turn higher, a bounce, then we can get aggressive and buy it against that low, is what I'm thinking. But because if it's not that, then it's too bearish to think about. It's going to break these. It's going to go down single digits. So my guess is we'll have some kind of capitulation move coming this week, and we'll see what happens to it. But what would be important is that 4-hour daily cycle is almost, even the daily cycle, but really you want the 4-hour daily cycle to erase divergence. And then, you have 3-wave move, and then it should be a complete, that would be a completed correction. All right, Pepe. So Pepe coin is like all the others, it's kind of just got one more low. So we have this big cycle here. I kind of updated this chart. 3 waves, 3 waves, and then you have 5 waves subdivided by 3 waves, and that gives you one more push down. So it should be close. Like I said, our final target in Bitcoin, we're not too far from it. Bitcoin's been in a bear market for a while, so we're not expecting crypto to go to zero. It would even surprise me. Okay, we're expecting actually a big bounce in crypto soon. but after this drop. So we need a drop. So this is what I'm thinking. It could always morph into something else, but that's the chart for now. TMF is about the bonds. Let's take a look what we have going on. Interest rates are green. So bonds are at a very dangerous moment for TMF owners. Last I checked, let's look at the 4-hour. You have this divergence. 45 erased it tonight. So let's see, 45 erasing it. Let's look at the 4-hour one more time. Yeah, it's going lower, guys. It's gonna go lower. So we're gonna have to probably change this forecast. So our view on rates was always higher and then lower, right? But right now it's probably just gonna go lower, and then it's gonna go into this box and do that. So I think that's the path we got to look at now. Okay. It'd be nice to see the 4-hour race divergence, the 45-minute. I mean, it could still do my original forecast, but it's going to have to hold 449. So let me update this and see where we're at with it. So 3 waves down. And then another corrective bounce here. See, I had this as a W and A, B, C. We'll go back to yeah, we'll have to label it like this. So I have to label it like this, and that would imply we'll probably need a bounce here. So rates should bounce right now anyway, but then that bounce should fail. And then go lower, like that. So something like that. So I think if you're on TMF, I would expect sell-off in it, and then. But if you're hoping for like massive riches on TMF, I would be really careful. I still think the overall macro backdrop is higher rates. But it does look like with the 45 erase and divergence, we have to kind of consider that we're heading right to our level. Right here. So now we'll look at the TMF. So TMF, maybe something like that. And then this is probably 5 down, up, up 5. So let's look at this wave structure. I think we're gonna make a change here. Something like that. So like a bounce, and then that. Trying to get through the majority of the wicks. It's not perfect, but you get the idea. Except trying to pick up that wick, but maybe I can widen it the mouth a little bit there. So maybe something like that. We've in this some kind of descendant triangle bearish continuation pattern that eventually breaks down. All right, so that's what I think TMF will do. So it does look like it's likely gonna go higher for a little bit longer. IGV, let's take a look at that. So IGV, it looks like we're finishing this 5, and we should be getting a bounce. We may have already started 4. And then we are thinking another low. Reason is we have it in a flat correction off of the grand super cycle. So we need 5 waves down. So you do need a bigger bounce, and then you need a 5. So it's likely to fall a little further. The only thing I caution you on, since it's an impulse, we have a potential count. Let me change this so we can see it better. This could be a 1-2, 1-2. Because if we break this neckline, head and shoulders top, a 5 would be too generous. So I think you got to be careful. It's not a 1-2, 1-2, and then you melt down, and we head to the 4, which is typically where these corrections end. We see time and time on our channel, anytime a wave corrects, especially on the grand super cycle, it usually always comes back to the 4 or just below it. So that would imply that this is a 1-2, 1-2. So we don't label what we're not a perma bear either, but I'm trying to be talk straight here, because I wouldn't be surprised if it goes further down. But since it's in a flat, once this C leg ends, it should bottom. So if it's going to do that, it'll happen pretty quickly within this downtrend. It shouldn't break this downtrend. So it'll just continue to melt down rapidly. If we break the downtrend, then we probably know that this 3-leg sequence is over, and yeah, it could go to new highs or bounce, but it could always do this too. Like I always say, like it could bounce and then go down lower later, years later. In fact, sometimes I've seen on major ETFs connector waves go 5, 6 years, 10 years. Go look at the XLE before it started breaking out. It could go sideways for 10 years. So we don't know how it's going to trade in the future. We're in this 3-wave sequence. We're almost done the C wave per this count. Will I be surprised if it goes down in a 1-2, 1-2? No, but I would be kind of silly to label that, because that would imply that stocks that have been beat down are going to still go down like another 50%. So I think this is the right view, and then we could bounce, and then maybe years from now or a year from now, maybe there's another leg lower we have to deal with, and then we just have to deal with that. So it's just something to think about. IGV. Ticker OP. Optimism. What is this? Ticker crypto ticker OP. All right. Well, it is called optimism. All right. So looks like it's in a downtrend, and it broke this low, so that opens up a dangerous sequence lower where these cryptos can go to 0. We saw this with many cryptos. Luna, all those have those that trait. So anytime you see the all-time, it's very dangerous to own. So your stop loss has to be 0 in it. You have to be willing to lose it all, because it could just disappear. But it looks like, as of now, looking at this, for me, I see 5 waves up here off of this high. So there's probably some kind of ABC top here. A, B, C. So you're looking for 3 swings down. It looks like we're moving in 5 here. Like a 1, 2, 3, 4, 5. And now we just need C. And when that finishes, you could have a big rally. And it looks like you're in 3, right? 3 of C, which is obvious, right? We can all stare at this and figure that out. So it has 1, and now we'll have to figure out where to put the 2 in a minute. Let's see here. So yeah, we would put that up here as a run-in flat. And now we're in this wave 3 to the downside. So now we just kind of label the wave. 1, 2, 3, 4, 5, but I'm sure we erased divergence. So this is another 1, 2 right here. One, two, and then you have another 1, 2 right there. So you're in the thick of the sell-off right now. So as you can see, it's going to go lower, more than likely. So I think you got to prepare. And so stock like this, you just have to trace the waves. So just like I did, just kind of, I would be sitting on your hands. I would have no interest in buying it. I would just wait until all these, at least the most of these swings are finished. You'll see the 4s and 5s develop, as there'll be rallies that fail. And once you see about 3 or 4 of those, then you know it's probably close to the end of the move, especially when you get the big bounce. So the best way to gauge it is sometimes it's hard to label all the 4s and 5s and get all the subdivisions right. So what I like to do is look at, okay, there's the 2. You see how long see how complex and how much time it took. So whenever you get a 4, whenever you get a bounce that's similar to that in nature, then you know you have one more low, regardless of what your count is. So you have to adapt your count because there's sometimes these subdivisions. It's so hard to see the dip sometimes. There's no rule in Elliott waves that everything has to be symmetrical and equal in terms of time and slope and all this. Like it just has to make the swing. So some of these swings are very tight. So sometimes those 4s and 5s are tough to get, especially within a wave 3 because it's by nature very volatile. So anyway, so I would be looking for more downside, and then at some point it bottoms, probably with the rest of crypto, but if I was really interested, I'd be waiting for, basically, I want a big bounce, and I want that bounce to fail. Then I'm interested in this coin if I was going to buy it. And I wouldn't really worry about all these little 4s. I would just be like, I need to see a big bounce and a failure. And then I'm like, okay, now we're at where we need to be. Okay. What's the difference? I'll go back to ABC and XYZ pattern. IBRX. That's one we used to trade during COVID, post-COVID. I remember that one. It made a lot of people a lot of money. See that old box? We had that way back here. That was actually after COVID. We had this one. Let's hope NT. What is it? NTKX. Is I think that's it. Yeah, it does something like that. So yeah, this chart, I know it because I was trading it before COVID. I mean, as you can see. So 1, 2, 1, 2. That's the count for that part of the count. Let me. But again, I may not have updated everything. Let's look at this here. Yeah. So get rid of this. And then here you have a 1, 2, 3, 4, 5 probably. Maybe something like that. Erase and divergence. So that would invalidate that idea. It was a 1, 2, 1, 2. So they must, whether there's an impulse. So yeah, so it looks like this is going into a bull market finally after all these years. But now that you finished 5, remember how deep these corrections are. You could still be making another 1, 2. So you may have to deal with another 1, 2, but I would say it would be viable and probably drop back down to 531 if it's going to happen. That's the problem. Like I suspect that's what will happen. Something like this, but as you know, and what we've seen in the past, it can just keep going. So the count shows 5 as of tonight, but tomorrow it could erase divergence and just keep extending. So I would be looking to buy the dip in 3 waves on this, if you can find it. Looking at this structure, it actually looks like it needs one more high, even if it is 5. Yeah, one more high. BURU. We're just going to ignore what, like, I don't know what that is, if that's a ghost. Oh, looks like we've labeled this before. So we ended that 5 and then we bounced back up. So that was 4. So it's a big 4. So now we need a 5. And then you erase divergence. So it's going to have more downside coming, right, to finish this 5 up. But as we've seen so many times, it could just erase divergence. This can become a 1-2-1, you know, like a 1-2, and then just keep melting down. So I think it's, I would expect more downside. Look, you even broke this massive area of support. It's now going to flip resistance. This is going to create heavy selling. I would actually, if it could come back up and rally back up into this area, that would be a short opportunity for me. So if it did, let's say it even goes down further, and then it goes back up in this area in 3 waves. But I think it's got more downside here in 5. And on the 4 hour, let me see here. I don't want to mess with the split. I know it's split, but it could mess up all my chart, and I don't want to mess up with it. So I think the general idea is I would expect this to push lower in 5 waves, and then it has a chance of bottoming. But you do need to see some bullish divergence, and it looks like you're erasing it. So you need to be careful. This could become another 1-2, and then it's essentially a go to zero stock. Hey, if markets take a dive tomorrow, can you give a box for MP and USAR? There's no box per my system. Those are the stocks that we can't just buy right now, but I'll go through them for you. Let me see here. Maybe I can give a box on MP. So if MP takes a dive, right? We have a box at 22.43, stop at 10.41. It would be a 1-2. It'd be a 1-2-1-2. Okay. There's a possibility that that can happen because we have this lower low right here and how we bottomed in this general area. So it's, again, anything can happen here. We could still do something different. We could still do something like this. But if you go into earnings and it like collapses, that's your buy area. But like I said, it could still go higher. I don't like to buy it here. You're just kind of gambling. But the box was way down here. I'll fill all those gaps, by the way. And then a USAR. Box is at 6.9. 681. And again, we're looking for a double because we made this bottom, I think. Let me see here. And that one held. Trying to think, why did I put that there? I think I was a hypothetical box if it were to do a double. So here, again, we have a 1-2, 1-2. But the problem is we only see 3 waves and 3 waves. So it's a coin flip whether you're going to get a massive meltdown or not. So we don't have a good indication to say confidently how to trade this right now. So I'd recommend being on the sidelines. It could do this and make a 5, or it could be a 1-2, 1-2 and really get going in a higher time frame, or it could do what I have here. Too many possible paths, and it's in the middle area. So both of these are kind of jammed up in that same situation, but this one did make a lower low. So that's kind of an interesting sign. And you have a lot of unfilled gaps, and it's below support, right? I mean resistance. So I would just be careful in them, but you know, we're not really seeing big things break out. You know, maybe we saw the metals, but the metals are making fives, like 4s and 5s. This is pulling back off of October, so it's in like a correction. All right. BTRD. Did I type that right? BTDR. BitDeer. So we have this chart that we were going with, and then we have a 1, 2, and now we're in that 3 of 3 is kind of what we've been seeing. So we can try to update this count. Probably go with like 1, 2, 3, 4, 5. But let me let's look at the shorter time frame. I want to see some divergence at that low here, and we have it. Okay, so now I'm okay putting this as a 1, 2. So it's got to finish this up like the rest of crypto and ETH and everything else. It just doesn't have a lot. It has more downside, but it's just not finished just yet. So I would be expecting more lows. But hopefully the meat of the sell-off is over unless it erases divergence. So I think that's the forecast right now. So then let's go to some of the questions you guys have from the top real quick, and I'll wrap it up. Duolingo is, the box is a little lower than where we are now. I think it's got more downside, and just looking through it. Yeah, we don't trade the news. At the end of the day, we don't really, we care about the war, but we're not making trading decisions based on whether the war ends or not. We make them based on the chart. And what did I tell you guys about the chart? The chart indicates there's going to be happy talk. It's going to rally. No, there's no surprise. It's going to rally. I'm telling you. Then something's going to go wrong. So just know, I'm telling you, we're going to rally. Maybe we open a little lower. So we're going to rally. We don't trade the news. The chart is telling us the news is going to get worse, but maybe not as bad. And I'm not following what's going on tonight. Maybe there's already happy talk out there, and there's hugs and kisses about everything. Oh, it's okay. And the oil, oh, we can't, oil's going up. Let's make peace. And we can't handle the markets going red. Like, I don't know, like, what's going on. We don't, in the end of the day, we don't need to worry too much about making trading decisions off the news. All right. So, but if this chart plays out, what it says is something's going to go terribly wrong. So don't believe whatever you read on Monday and Tuesday to pump the markets is likely inaccurate, false, or used to manipulate you as a trader to take off your hedges and buy. That's all I can tell you. That's how I believe, and that's my beliefs. Now you may not believe that, then that's fine, but that's what I believe. All right, so then what's the difference between, so an ABC pattern is subdivided. So if you have A, B, C, the A wave is subdivided into 5 waves, like this, and the C wave is the same. Okay, very, very straightforward. And the connector is subdivided into 3 waves. Something like that. The WXY pattern, the W is subdivided into 3 waves, not 5. Okay? So you would have, and that's usually subdivided into 3 waves, and a lot of people write it as A, B, C, right? And then this A has 5 in it, and this C has 5 in it. So really what a W wave is an ABC, like a zigzag. And so what it does is connects 2 zigzags, 2 corrective structures. So it's like glue that connects two corrective structures together, is what it does. You see, you have one corrective structure, and then you have another, and this is the glue that kind of connects the two together, right? So if I was going to repeat this over here, I would just draw, I could draw, make this whole thing W right there, X and Y, right? And I could just copy that whole thing and put that there. So you see how it works? So that's the indication. Now the tricky part, and this is where people that are really orthodox about Elliott wave theory and they're super religious about it hate what I'm about to say. But I'm telling you, this is how the market works right now based on what I've seen and the charts. They all, when you read it, you say it's ABC. Okay, but what I've seen, and what I've seen too, is it can subdivide into WXY as well. It doesn't violate the rule because it's still in three waves. It's a three-wave structure and a three-wave, but this is what you see more. I think an Elliott wave purist would say that's sacrilege. That is no. Then you didn't label it right. But I'm telling you, when I look at the market, there's so many structures where it's like this. And so the WXY connects two lower degree WXYs together, right? So you can choose to follow that or not, but that's what I've seen. And I've seen multiple Elliott wave traders trade like that from different, different people I follow that are unrelated, they're unconnected, and they use that WXY theory, and it works. So I've adopted it too, and I've seen it work, so I use it. But I'm telling you, Elliott wave purists out there, they'll say it's wrong, and it's not right. But in the reality is, the market has changed over the years. Remember, Elliott wave theory was done a long time ago. Market's different. Things change. Theories have to change. Ideas have to change. People change. So, and we approach Elliott wave theory not as a religion, not super orthodox, because if you do that, I could spend 2 hours on one symbol. Oh, is that all? Is the nuance of the subdivision? Is it right? Let's look at the 15-minute, the 5-minute. You could spend hours worrying about that stuff, guys, and then you get no progress. We have to cover so many symbols. We don't have time for that, and so I know that bothers people too out there. But that's not, our system isn't good. I always say, like, my service, if you want people that make good charts, then there's other people out there you can follow and even become members of that make beautiful charts. But I hate to say it, they kind of suck as traders. Okay, but they make beautiful charts. I'll give them that. There's people out there, God, their charts are like the best I've ever seen. But they don't trade in, not their thing. Okay, we trade. Now the chart helps us explain what's going on. And again, I'm a staff of one. Maybe one day I can hire someone to make me beautiful charts, and that would be great. But right now, this is what we've got. So anyway, that's the AB. That's the difference between those two. And do I expect the market to get a bid? Sure. Sure, why not? Again, I'm not following the news. Obviously, something really bullish happened. So let me look at my Twitter feed here real quick and see if I see anything come up. Let's see what comes up in my feed. If there's anything good. Well, terrorist attacks in Cincinnati, 13 people shot, and that's not pretty good. Circuit breaker triggered at NYMEX crude oil open an hour ago. I'm not really sure. Did they remove the buy button from buying oil? Maybe that's what they did, guys. Maybe the market's bouncing because they removed the buy button in oil. Amazon data center bombed in the UAE. That doesn't sound too good. It doesn't sound like things are simmering down. Again, this is what's in my feed right now. And I'm only reading from sources that are typically right, not the Iranian propaganda stuff. Well, I'm not seeing anything bullish other than perhaps they messed around with the oil market, the futures, and perhaps they removed the buy button, and that's relieving pressure in the market mechanically. Okay, so maybe that's what's going on. I skipped MVTS. Oh, my bad. Sometimes I do that because there's just so many symbols to look at. MVTS, a 1-2. But I think what we're doing here is we're saying it's moving in 3 waves. So we have 3 waves, and we're looking for 3 waves. And when I look at this account, it looks like you have 5 waves down. This looks like a triangle that's trying to form here. And then we get another low. I was torn by saying, is it B here or not? But when I look at this and really step back, I think it's turning into some kind of triangle, or B isn't done yet. And it's going to go back to like 13 bucks and come back down. I think it's going to turn into a triangle. So let's try to draw that, and you can kind of follow it and see how it breaks out. So we'll try to draw this like that. There, it's close enough. So maybe something like that. Okay. So maybe you get something like that. All right. Just kind of reading through the rest of the market. While I see your guys' questions. Are they halting oil stocks? Yeah, see, I just read that in my feed. I think they removed the buy button. See, this is, guys, this is why we can't win in the market, guys. They just removed the buy. That's what they do when the market, and I always worry, you guys out there that are like, oh, the grand super cycle, it's Dow's going to go to 6,000, all this. If you believe in all that, they'll never let it. They'll just shut the markets down. You'll never be able to go in and even, if they wake up and the markets are down that, like, they'll just shut them down. They'll just say you can't sell. You won't be able to sell because the markets won't even be open to sell. And they'll just reopen them until the conflict's over. They'll say, okay, when World War III is over, we'll reopen the market. I'm being facetious. But, you know, guys, that's the kind of manipulation we're going to have in the market, right there. And you're not going to be able to get on your platform. So you have to prepare when there's time to prepare, not when it's in the heat of the moment, because you may not be able to log on to your Fidelity or your Robinhood. They may remove the buy button on your futures. The triple bear ETF may go under because of the volatility or the bull, and you won't be able to get out. So you got to prepare and think of that like operational risk, because in a massive sell-off, there's going to be operational risk, not just stock risk. And now you have to worry about people removing buy buttons and sell buttons and things to manipulate the market. And again, they think they're doing God's work, but what they're doing is it makes the situation worse later down the road, because then people can't get out of the positions they need to and everything else, and then it creates a problem later than now. So, but yeah, that's what it looks like. Thanks, Jeff. Gerlaf, Gerlaf, great channel. Thank you. All right, I'm at the end. Thanks, guys, for dialing in. Again, if you're interested, you can send me your stock symbol through my website to look at. And if not, have a good night. Consider joining if you haven't joined. We update our charts all the time. I'm not always right, of course, but a lot of times we are, which is great. We had a really good last couple of weeks, man. Boy, we were definitely right more than we were wrong. It's a good stretch. Let's keep that up. And let's see what happens Monday, and stay safe out there. Especially if we got sleeper cells and crazy people, radicalized individuals that now feel motivated to go do harm.